During the investor conference held on May 24th with JP Morgan, SoFi CEO Anthony Noto shared valuable insights for investors interested in SoFi stock. Join me today as we focus on SoFi's long-term strategy and its suitability for investors. One key question posed by JP Morgan analyst Reginald Smith was aimed at understanding SoFi's overall objective and the problem they aim to solve, as well as their target audience and the size of their potential market. These aspects play a crucial role in assessing a stock's investment potential. SoFi's CEO, Anthony Noto, stated that they aimed to help people achieve financial independence and realize their ambitions. He emphasized the need for a financial services company that caters to everyday banking needs and significant financial decisions like buying a home, obtaining student loans, and acquiring insurance. SoFi aims to be an all-encompassing platform that offers its customers a wide range of financial services. By offering a comprehensive suite of financial products, SoFi can attract customers and sell them multiple products, leveraging the advantage of an existing customer base. However, this broad approach also poses challenges as it spreads its focus thin across various services. Although it allows SoFi to cater to a wide range of financial needs, the absence of a concentrated focus on any specific service may be a drawback. On SoFi's website, you can see the extensive array of products they offer, including checking and savings accounts, credit cards, investment accounts, student loan refinancing, mortgages, insurance products, and small business financing. SoFi aims to be a one-stop shop for all financial needs, providing a lifelong partnership with its customers. SoFi Technologies also faced concerns regarding its account strategy and valuation. The company has not sold significant personal loans in the past 6 months and has refrained from selling asset-backed securities for over a year. This has led to questions about their aggressive fair value accounting approach, which recognizes income upfront instead of gradually over the loan's lifespan. Oppenheimer's Dominic Gabriel acknowledges that this approach inflates SoFi's near-term book value compared to peers using cost accounting. Critics have raised concerns about the potential for unrealistic FV assumptions, the impact of FV marks, and the recent imposition of cost accounting on the company. Gabriel conducted a comprehensive analysis of personal loan ABS transactions and other benchmarks related to SoFi. The data suggests that SoFi's FV mark methodology is sound, supporting their coupon rates, prepayment assumptions, and discount rate assumptions. It indicates that SoFi's balance sheet implied margins align with market movement. However, Gabriel highlights that adjusting SoFi's tangible book value or TBV to be more comparable to peers would result in a $1.67 billion impact, potentially reducing SoFi's near-term valuation by 68% from the current level. Nevertheless, he believes that the current stock price, which is $7.46 as of June 6th, already accounts for most of this impact. Gabriel suggests that SoFi will likely resume selling personal whole loans and/or ABS. The company's focus on deposits, which have lower funding costs on average, explains its limited use of the ABS market. He further notes that companies typically utilize multiple funding sources for diversity. SoFi experienced a 7% increase in its stock price following news of the potential resumption of student loan payments. As part of a debt ceiling compromise, student loan payments are expected to restart, benefiting SoFi as one of the leading student loan servicers. This could result in loan originations returning to pre-pandemic levels by the end of the year. The agreement to raise the federal debt limit by $4 billion, announced by President Joe Biden and House Speaker Kevin McCarthy, ensures that another increase will not be necessary until at least 2025. As part of the deal, Republicans demanded an immediate end to the pause on student loan payments. Consequently, around $5 billion in monthly student loan payments could resume by the end of August, with a 60-day notice period beginning on June 30th. Before the COVID-19 pandemic, SoFi had a thriving loan refinancing business. However, due to the student debt payment pause, its loan originations decreased from $2.4 billion in the fourth quarter of 2019 to $2 billion in 2022. SoFi can resume lending at a high rate, as evidenced by significant deposit growth in recent quarters, surpassing $2 billion per quarter. Despite a deposit flight in March that affected several banks, SoFi remained relatively unaffected due to its comparatively higher customer interest rates. It is worth noting that SoFi CEO Anthony Noto demonstrated confidence in the company by purchasing 188,000 shares of SoFi earlier in May, representing an investment of nearly $900,000. Noto's purchases began on May 4th with a 50,000 share acquisition, followed by another 30,000 shares the next day. On May 15th, he further increased his stake with an additional 108,000 share purchase. Noto now owns 6.49 million shares, equivalent to 0.7% of the company. This move reassured shareholders who have witnessed a 24% decline in the share price over the past year. Looking at the SoFi stock forecast, the stock has been in a downtrend since February 2nd, encountering resistance in the range of $8 to $8.50, which has persisted since March of the previous year. A descending trend line has restrained SoFi's upward movement since February 2nd. Additionally, Wedbush assigned a $2.50 price target on SoFi based on its evaluation of the company's accounting tactics and fee income. To trigger a significant rally, SoFi bulls will need to surpass the descending trend line, which stood at $6.10. The resistance level at $6.50, which previously acted as support at the beginning of the year, must also be overcome. If the trend line is not breached soon, the recent support at $4.50 will need to hold. SoFi also experienced a significant stock price spike, outperforming major financial sector benchmark indexes. This surge can be attributed to the news of a tentative agreement reached to lift the debt ceiling and avoid a default. Of particular interest to SoFi investors is the provision in the agreement that signals the end of the pause in student loan repayments, which has been in effect since early 2020. While the pause was expected to end once the Supreme Court ruled on President Biden's student loan forgiveness plan, the agreement now provides a definitive end date for the first time, set for August. The end of the student loan payment pause is significant for SoFi because student loan refinancing is a core part of its business. Historically, SoFi has focused on student loan refinancing as its primary offering. However, with federal student loan borrowers not required to make payments for over 3 years, the volume of student loan refinancing has been limited. Now that payments are expected to resume, it presents a major growth opportunity for SoFi. There is over $1.6 trillion in outstanding student loan debt that could potentially be refinanced. Additionally, SoFi's customer base had grown to 5.66 million members, more than 5 times the size when the payment pause started. This larger customer base provides ample opportunities for cross-selling student loan products in the coming quarters. Overall, the news of the agreement to lift the debt ceiling and the impending resumption of student loan payments has fueled optimism among investors, leading to a spike in SoFi's stock price. This May 2023, SoFi technology stock embarked on a journey filled with highs and lows. Let's look at the events that shaped its historical stock price. May 1st and SoFi stock encounters resistance at $6.52, a familiar level that has acted as support in the past. May 4th, a vote of confidence from CEO Anthony Noto as he purchases 50,000 shares of SoFi stock, demonstrating his unwavering belief in the company's future. On May 19th, whispers of a potential agreement to end the pause on student loan repayments begin circulating, bringing hope to SoFi's student loan refinancing business. On May 26th, analysts at Oppenheimer reaffirmed their positive outlook, emphasizing SoFi's growth potential in the student loan refinancing market. On the same day, the market sentiment turns optimistic as SoFi stock closes at $5.41, driven by the anticipation of student loan payments potentially resuming. And finally, on May 31st, SoFi stock closed at $6.94 as investors eagerly await the next chapter in the company's journey. Throughout May 2023, SoFi technology stock faced resistance. Still, CEO Anthony Noto's confidence and positive market sentiment surrounding potential student loan repayment changes drove the stock on an upward trajectory. What are your thoughts? In the comments below, let us know if you think SoFi's journey will be uphill from here. And if you enjoyed this video, don't forget to like, share, and subscribe for more videos like this. Join us next time as we continue to follow SoFi's captivating story in the ever-changing world of finance. This is Nate, and thank you for watching. If you want to see more of SoFi services in detail, check it out in this video. Go ahead, click and enjoy the video.